So the San Diego housing market took a little bit of a dip there in December 2023. Now that we're in a new year, we're being told that inflation's behind us, yet prices at the grocery store and the gas pump are still incredibly high and jobs numbers are all over the place. So what's going to happen? A lot of talk about mortgage rates and how's all that going to impact the housing market in San Diego? Well, let's take a look. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for January. Really a little bit more of a forecast, actually. So I think this year is basically going to be kind of the years of the fives. I think interest rates should be able to hit hopefully 5% by middle of the year. I think we're going to sell a little over 5 million homes total this year. That includes new construction. And I think that the approximate home price appreciation rate is going to be somewhere around 5%. So digging into that, Dean Baker basically said it appears mortgage rates are now falling again. And he thinks that basically we could get below 6% this year. I do kind of agree with that. Lauren Kuhn said a marked turn could be expected as mortgage rates have plunged in recent weeks. Just realize if the mortgage rate gets into, the handle is what is that first number, the fives, that five. If we can get a handle of 5 in the mortgage rate, I think you're going to see gas poured on top of this housing market. Things are going to come roaring back just from a psychological aspect in buyers and sellers' minds. Okay, we know right now this is FHFA loans. Basically 22% of them are below 3% interest rate, right? 36% of them are below 4%. Kind of breaks down to this, these people are probably not selling. These people probably not selling. But these folks right here, if we can get a mortgage rate down in the 5%, all of these people are now in play. It might even pull some of these people in play. And what happens is we will actually see a surge of inventory, people coming back to the market to put their home on the market to make some type of move. So that could be definitely good news. Lance Lambert here basically said that the lock-in effect, keep in mind when the mortgage rate's 6.8%, if you can go and get a lock somewhere, you typically get a little bit of a lower rate. I think now that sellers are realizing that 3 and 4% are probably not coming back anytime soon, they're starting to recalibrate. If we can get something in the fives, I think that's going to be acceptable, kind of quote unquote to most buyers. So we'll see if that's definitely going to move the needle. Keep in mind though, this is a study out of Bright MLS, or a really large MLS in the Mid-Atlantic. Basically said the top 3 reasons buyers paused their decision last year was 72% of them said mortgage rates, 34% of them said inventory. If we can get a lower mortgage rate, that will definitely boost inventory. It could knock those 2 biggest things out of people's, 2 biggest hurdles basically for buyers to get back into the market. Okay, Goldman Sachs is predicting 3 consecutive 25 basis point cuts in March, May, and June. That remains to be seen. Again, everyone's saying, when you look at a lot of these metrics, including our job numbers, it seems like inflation is not that big of an issue. Again, if anybody goes to the grocery store or the gas pump, they realize it's still kind of persisting. I think it may be around a little bit longer. So we may not see 3 cuts. We may see 3 small cuts. We're just going to have to see. What we do know is over the 50-year, the 30-year mortgage rate and the 10-year treasury yield are kind of, they go hand in hand, right? They kind of almost move in conjunction with one another, with the average spread being 1.72%. Right now we're at 2.78%. If we can get this number down to somewhere around 2%, that puts the rates in the 5, and that can absolutely be huge. Okay, so 5.5 million total home sales. Well, keep in mind, I think that new construction is going to play a huge role. I thought this was interesting from National Association of Home Builders. As of last year, November, basically new home sales accounted for 31% of total homes, just because we had such low inventory in the resale market, right? But still, that 31% is almost 3 times higher than the historical average. So I think we're going to see a lot more new construction sell this year. Also, keep in mind that a lot of these builders are being aggressive. They're willing to buy down a buyer's mortgage rate, right? Maybe even into the 4s. So if you are downsizing, you want to sell your home, your kids are gone, or whatever it is, and you want to buy a smaller house, a 3-bedroom, 2-bath, smaller house, you may be able to get an interest rate in the 4% here this year, and then definitely bring your home to market again with that increase in inventory. So we'll see what actually happens. 5% being the approximate home price appreciation rate. The black bars are basically the 49% average in home price appreciation. When you overlay 2023 in there, basically what we're looking at is things are starting to get back to normal. That's exactly what we want to see. Okay, as far as home price forecasts, this is a multitude of people, the majority of them positive, with the advent of Zillow and Realtor are the only 2 outliers there, but still the average of all 8 of them was 1.5%. I've always preferred the home price expectation survey. This is Fannie Mae's survey. They do it in conjunction with Pulsenomics, where they basically interview over 100 housing experts on what's going on over the next 5 years. And this is what they're looking at. I think this number might be a little bit low, but they're calling for somewhere around a 3 to 4% appreciation over the next 5 years, which again is back to kind of our historical rate, right? When we look at Case-Shiller and FHFA numbers, you're kind of seeing a very similar thing in there. This is them seasonally adjusted. But just keep in mind that, what we've already seen in the CoreLogic S&P Case-Shiller index is a gain of about 7%. That means it's 1% higher than the peak in 2022. So remember, we had that little bit of a correction in 2022. We've already regained all of that loss, okay? Looks something like this. This is the 42-year average of our appreciation. We're right about where we nearly need to be. Okay, so looking at San Diego housing numbers, keep in mind this is for all of San Diego County. These are all housing types combined, and these are all median numbers. And when we look at the percentages, they are year-over-year changes. So our sales price is 805. This is up 7.5% year-over-year. Keep in mind, this is still down about 5% from the peak last year. Okay, so we've still got a little bit of a way to go. Active market time is now 18 days. When this number's in red, realize things are selling quicker. That's good news. Price per square feet's up 10.5% year-over-year. Our month's worth of inventory, even though it's up 7%, still only 1.5 months worth of inventory. Remember, we need 6 months for a healthy, balanced market. Okay, all these numbers above this line are our lagging indicators telling us where the market's been. Numbers below are leading indicators telling us where the market's going. Still seeing a lot of red here. Okay, so basically pretty much the same. We know home prices were down a little bit in December, that's for sure. But we really need these rates to kind of get a move on so that we can start to see resale inventory coming back up. And that's really what's going on. So if you have questions about, hey, what's my home worth? What's going on in my neighborhood? Is this a good time to buy or sell? Just reach out. More than happy to have that conversation with you. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.